25-year-olds with a white picket fence and a mortgage. A new report out from Redfin reveals Gen Z is outpacing their parents' generation for home ownership. Let's break down that data with Daryl, Fairweather, Redfin chief economist. Daryl, first of all, thanks so much for joining us. I got to jump right into this. And, you know, there was, we saw in the numbers, there was definitely a difference between millennials and Gen Z. So unlike millennials, it appears that Gen Z can buy a home and some avocado toast. What can you tell us?
Gen Z is doing slightly better than millennials were at their same age. We looked at 25-year-olds, and for Gen Z, their homeownership rate was a little bit above millennials and Gen X, still below baby boomers, but at least the trend in terms of generational homeownership seems to be reversing.
So what do you attribute this to, and what's the impact?
One of the biggest things that millennials had holding them back was the Great Recession. It was a very long recession. Unemployment stayed high for a long time, which was when millennials were entering into the labor force. Many of them moved to expensive areas like San Francisco, New York, Los Angeles to find a job. And those places are really tough places to buy a home. Gen Z, on the other hand, they had the pandemic recession, but that came with stimulus checks. It came with student loan pauses, and there was a really tight labor market. There still is a tight labor market. So if they're living somewhere more affordable, like Virginia Beach, for example, homeownership is more attainable for them.
So Gen Z is, based on these numbers, buying homes where they can afford them, because I can see based on the numbers, how could this happen in, say, the Northeast? But you've said in the data, it looks like they are spending a larger portion of their income on monthly payments. What is the issue for why can't millennials do, or should millennials even do that? I mean, the longstanding idea in, for instance, the personal finance space is you shouldn't spend more than 30% of what you're bringing home on housing. Is Gen Z spending more than that?
Well, Gen Z is buying in much more affordable places, but their incomes are lower. So they do end up spending a bit more if they're going the home ownership route. Millennials, they actually do have the option to move to a more affordable place and buy a home. A lot of that happened during the pandemic, but it was later in life for them. Millennials are getting older. They're in their mid-30s, some are in their 40s. When they were 25, it was a very different housing market, a very different labor market. That's the important thing, where they didn't have the financial security to move somewhere where there wasn't as strong of a labor market and buy a home.
Do you have a prediction going forward, though, about the housing market? There's been a lot of talk about another potential bubble within the housing market. We haven't seen it bust yet. Are there some headwinds that you can see on the horizon that would affect Gen Z, millennials, whatever the generation we're talking about right now?
Well, home prices were down 3% in March, so home prices have come down from last year. I think the gap between this year and last year will widen as we go into summer, but then it will shrink because that's when home prices started going down, was summer of last year. So overall, I think most of the home price correction has already happened. Now, if mortgage rates go up more, we could see prices decline, but I think the direction we're going to be headed in at the end of this year or into next year is that mortgage rates will start to come down and demand will start to come back. It's going to take a lot more for homeowners to come back, though. Inventory has been a huge problem. Many homeowners have locked into 3% mortgage rates, and it's going to take a lot to get them to want to sell and lose that golden mortgage rate they got during the pandemic.
Yeah, hard to imagine rates going anywhere near that in the next several years, isn't it, Daryl? May 1st, everything changes in terms of mortgage fees. How does it change? What do you believe will be the implications?
Starting May 1st, there'll be a slight change in the mortgage fees applied to high credit borrowers versus low credit borrowers. It'll still be true that if you have high credit, you're going to get a better mortgage deal, but it won't be like relatively as big of a gap between when you have high credit versus low credit. This will even the playing field a bit. We've seen a lot of FHA borrowers come back to this market because there's less competition and they can finally get an offer accepted. So that will make things a little bit more affordable for your lower credit, lower down payment type borrower. But overall, it's still better to have good credit. So it's not a huge change. And given the volatility in rates, you might not even notice it because rates keep swinging every day anyway. A small fee you're probably not going to really be able to detect.
Daryl, these headlines and what you're saying has been scaring me. You mean I worked so hard to get, there's going to be a humble brag here, more than 800 points credit score for this kind of marketplace right now. I mean, so what else is on the horizon in terms of the housing market? What are you seeing?
Well, I think it's going to be a very cold housing market going forward for the spring. We have 20% fewer home sales happening right now, and I think that's going to continue until mortgage rates come down, and we're predicting that that will start to happen towards the end of the year. So it's just going to be one of those down years. Housing market goes up, it goes down, and it kind of cycles, and this is a slower time.